I haven't dived into Sydney and Melbourne too much because on the broad brush, they don't look fantastic. I know Sydney's had some growth, or at least that's what they've posted in the last 12 months or less than 12 months. When I've done searches, no Sydney suburb and no Melbourne suburb have come up as being in that growth phase. So I do think Sydney and Melbourne are still going to ride that stagnation wave for a bit longer and maybe a few bumps along the way. But I think a lot of it, because interest rates are where they are, a lot of it comes down to affordability. And I know that a lot of people are going to, from Sydney and Melbourne, are going to tell me that their area is going up or down or whatever it is. Again, it's very suburb specific. You can't just talk about Sydney going up or Sydney going down in one aspect. But if you want to talk about holistically, if it was me, I personally wouldn't be doing anything in Sydney unless you're getting into those growth locations where you've basically got artificial growth from developers setting prices, and you are in an area where your supply is quite restricted and limited, so you're not going to get flooded with supply over the next few years. So I do think that, there's buying opportunities in any market as long as you know which markets to pick. But when I look at Melbourne, Sydney versus, say, Brisbane, you get better rental returns in Brisbane. You can almost buy blindfolded, I think, in the next 12 months and make money in Brisbane over over the preceding few years. Whereas I don't know you could do that so easily in Sydney and Melbourne. And the barrier to entry is so much higher in Sydney and Melbourne as well. As people know that live there, it's quite expensive. So if I was living in a city, Sydney, Melbourne, and I wanted to buy a house, I'd probably just rent and use that money elsewhere to invest in a growth location, especially if rents in those locations are 2.5%, 3% return, and you can buy something pretty much off the shelf in Brisbane for 4 or 5% return, and that's not even really trying. So you could use your money to invest somewhere that is growing and then just rent where you are. Plus your investment property is tax deductible as well, whereas your own home is not tax deductible.